Hey guys, what to trade this week? In this video, we'll analyze WTI crude oil, we'll discuss gold after NFP, we'll discuss the example of smart money trading on EURAUD pair, and we'll analyze dollar Swiss. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. I want to start our analysis with the dollar Swiss pair. We are in a daily time frame, and first let's execute the trend analysis. I want you to realize that dollar Swiss pair is trading in a long-term bearish trend, and recently in May the price set a new low close, and after the price set a new low we started a correctional movement. And because the trend is bearish, our task will be to look for the point or for the area from where the next trend following wave will most likely initiate. In order to do that, we should analyze the key levels, and we should spot the areas of supply from where bears may start pushing. And here goes our first very important structure, traders. Take a look. Here we have a very important horizontal zone of supply. Why that area right here is so important? Because you can see that in the past, from that structure, we saw very strong bullish movements. And after the breakout, that structure turned into resistance from where a bearish movement initiated. And you can see that last week, when the market was testing that structure, we formed a bearish engulfing candle here on the daily, and that bearish candle engulfed that strong bullish candle. And that is the sign of the strength, of the local strength of the sellers and the willingness of sellers to sell from that structure. So that resistance here will be on focus. A bit higher over here, we have one more very important structure. Again, from that structure, strong bearish move initiated, so we should take that into consideration. And over here, we have this structure. So we have three very important resistances, and from one of these resistances, the bearish wave may initiate. But how can we know that the bearish wave started? Here, we should analyze the recent price action and spot that for now, the price is perfectly respecting that rising trend line. Moreover, if we add one more, we can spot that here we have a classic example of a bearish flag pattern. So the market is correcting within the boundaries of that flag. And for us, the trigger to short will be a bearish breakout of the support of the flag. Once the market breaks and closes below that on a daily, probabilities will be high that the pair will start falling. And the point is that the bearish impulse may initiate from one of these resistances. So once the market tests one of these resistances, you monitor the reaction of the price to the support of the flag. Once it is broken, you short. So if the price goes higher now and reaches that resistance, again, you wait for the test of the support of the flag and wait for a breakout. That will be your trigger. What a crazy market opening on WTI crude oil. After the Saudi's decision to cut the production rate, we saw a huge gap up. And the point is, traders, that currently WTI crude oil is approaching a very important horizontal structure resistance. And you can see that currently we are trying to break that. Remember, traders, that a bullish breakout, a daily candle close above that resistance will be a very important bullish clue. It will be a very important bullish signal that will most likely lead to a bullish trend continuation to higher structure levels. So if we close above that resistance, we'll expect a bullish movement at least to that resistance. So that will be a very important trigger. And a couple of words about the intraday perspective. Here on an hourly time frame, we can see in details our gap up. And you can see that after the market opening, the market was trying to fill that gap, but it didn't manage. But you should always remember a very simple rule. There's always the 80% chance that the gap will be filled. So I still believe, traders, that the market participants will manage to fill that gap. And in order to fill that gap, the market participants need to reach the gap opening level. Here it goes. That is the gap open level, and I think after the stabilization of the market, after some fluctuations, we will definitely manage to reach that level. So please take that into consideration, and before you trade oil, I strictly recommend you to wait for the gap to be filled. Here in EURAUD, I see the signs of smart money. And what do I mean by smart money? By smart money, I mean the big players, the banks, the hedge funds. And in order to spot the signs of smart money, let's execute the multiple time frame analysis here in EURAUD, and let's discuss the current situation. The first thing to note is that last week was very bearish for EURAUD, and last week the market dropped sharply. On Friday, the market dropped and the price reached a very important horizontal structure support. You can see that just in the recent past, from that support, we saw significant bullish movements. At the same time, we can see that EURAUD pair is trading in a long-term bullish trend. So from that support, a trend following movement may initiate. But before we buy that structure, we should analyze the intraday timeframes, because there on the intraday timeframes we can see how the market participants react to that structure. And there we can also monitor how the big players act. So let's open the 4-hour time frame and let's investigate. We are in a 4-hour time frame, and you can see that we were falling sharply. But once our support was reached, the market stopped falling and we started to trade within a very narrow range. And it looks like the market is quite weak at the moment. But what if I say that within that narrow range, smart money are trading, and within that range, the smart money are placing their orders? How do I know? If we open volumes, if we check the volumes, we can see that even though the market here looks weak, we see some intriguing volume spikes. These volume spikes mean that someone is placing big orders, and within that very narrow range, the money are changing hands. That here we see some important activity. The idea is, traders, that big players like banks and hedge funds never place one single order. Instead, they place multiple orders, and usually they act within the ranges, because such kind of ranges provide the liquidity. When the market is trading within the ranges, the big players are accumulating their trading positions. And here is a very important principle. Once the market starts trading within the range, there are always two potential scenarios. The market may accumulate, and the accumulation means that buying volumes are accumulating, and after some time the market will violate the resistance of the range and the market will go higher. Also, such a range may signify the distribution. It means that the selling orders are accumulating within that range, and after some fluctuations, the market will break the support of the range and the market will drop lower. And monitoring that range here in a 4-hour time frame on EURAUD, we should wait for the decision of the big players, because once they decide where exactly to push the market, we will see the breakout of the boundaries of the range. We will either see the breakout to the upside or to the downside. So what will be our plan here in EURAUD? Our plan will be to wait for a bullish breakout of the resistance of the range to buy. And if the price violates the support of the range, we won't trade. Why? Because as you remember, we executed the trend analysis on a daily time frame, and we discussed that the trend is bullish. We always should remember the rule that the trend is always our friend, and it is always better to be on the side of the trend. So for that reason, we will trade only the bullish breakout of the resistance of the range. In order to confirm the breakout, we will need the 4-hour candle close above. Then we will set our buy limit order on a retest of a broken resistance of the range. We will set our stop loss below the lows of the range. That stop loss will be very safe because with such a stop loss, we will also be protected by that key horizontal structure support that we spotted on a daily, and our initial target for the trade will be the closest horizontal resistance. And here we have our strong horizontal resistance, and there will be our target. And here's one more very important tip for you. If you trade the smart money, you should remember that in order to confirm the breakout of the resistance of the range, you should also monitor volumes, and you should look for the volume spike with the breakout candle, because the volume spike with the breakout candle will signify the involvement of smart money in breakout. And of course, that will dramatically increase the probabilities that the pair will keep growing. Now let's analyze gold. And I guess you saw that after the NFP release on Friday, the market dropped. And here in a daily, we have formed a strong bearish engulfing candle that engulfed two bullish daily candles. And I want to remind you, traders, that earlier we have already made the conclusion that gold is trading in a minor bearish trend. And you can see that after the price set a new low, right here, we started to consolidate, and we can see that currently the market is trading within a horizontal trading range, and depending on the reaction of the price to the support of the range, I see two potential scenarios. Of course, the first scenario is the bearish scenario, and probabilities will be high that we will see the breakout attempt of the support of the range. And the bearish breakout of the support of the range will trigger the trend following movement. And the daily candle close below the support of the range will most likely push the market lower. And what will be the next goal for the sellers then? The next goal for the sellers will be that horizontal structure support. It will be the closest strong structure that we see on a daily, and that will be the next goal for the sellers. So that will be your plan to short gold. But how about the bullish scenario? If you want to buy gold, you should monitor the reaction of the price to the support of the range. Remember what we spotted on EURAUD. We spotted the range. And you can see that on gold, before the NFP release, we also got the range when the market was approaching the resistance of the range that we spotted on a daily. And you can see that after trading within the boundaries of that narrow range, the price violated its support, retested that, and then we saw a strong bearish movement to the downside. So the plan will be to let the price start consolidating, to let the price start ranging, and your confirmation to buy will be a bullish breakout of the resistance of the range, and that will push the price up at least to that resistance. Checking the economic calendar and the fundamentals, we can see that we are not expecting any important fundamentals that may affect gold this week. For that reason, I strongly believe that technicals will dominate. So follow the support and resistance, the price action patterns, monitor how the market reacts to key levels. That will be the best plan for you to follow. As always, traders, if you want to learn more, if you want to see how I trade live, don't forget to check my premium educational group, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching.